Hello ladies and gentlemen. Alright guys, so today I'm going to be sharing with you simple support and resistance hack. Over the time, I've seen people who come to me and start complaining that whenever they want or spot out support and resistance and they enter the market, they get stopped out and market goes the opposite way. Or maybe when they enter the market get them stopped out and start going in their direction. Maybe you have not considered these 5 things I'm about to mention right now. If you are somebody that experienced that whenever you want to trade support and resistance and you keep on losing, maybe you should consider these 5 things I'm about to mention. And number 5 is very important. So make sure you watch this video to the very end. I've backtested this strategy whenever I see support and resistance opportunity in the market. I have backtested these stuffs. If I do not see any of these stuffs, I don't want to trade or involve in the market for the day. I just go to another pair, and that's just all. So in case this is the first time you're coming across this channel, my name is cyrilczed. Okay, what you need to do right now is to click the subscribe button, click the like button, turn on the notification bell so that you'll be the first to get first-hand update whenever I drop it based on financial trading. All right, so let's make it make sense. Without further ado, let's dive into it. So whenever you come to the chart, so what you need to do first of all, okay, you need to spot out the whole numbers. These whole numbers actually regarded as the psychological levels, okay, the psychological level. So make sure you spot out this psychological level. Number 1, first of all, okay, make sure you spot out this psychological level whenever you come at the early stage of support and resistance. Okay, psychological, like I say, psychological level is the whole number in the market. This is where the sellers or the buyers are most likely to execute a trade. All right, so you want to actually be part of those, either the seller or the buyer, part of those that will execute the trade at the psychological level whole number. So that's why it's very important for you to spot out the psychological level. So number 2 is you need to mark out previous swings. Okay, now for you to map out previous swings in the market as a day trader, you actually need to go to higher time frame. Okay, higher time frame like 4-hour time frame. So 4-hour time frame will give you the overall trend and the major swings in the market. The major swings whenever you want to trade support and resistance, spot out the major swing. You know, the support and resistance actually do work well with the ranging market. Okay, when the market is ranging, that's why I say you should always spot this ranging market at the earliest stage. Okay, so that you can be able to trade support and resistance. So you use 4-hour time frame to spot out the overall trend of the market and the previous swings of the market. Now you now come over to 1-hour time frame, okay, to actually spot the current market, the current trend of the market. And this current trend will now give us, okay, the current highs and lows of the market. Okay, this current we actually give you high and lows of the market. Remember, when it comes to the trend of the market, either uptrend or downtrend, market do form like higher highs, higher lows, or lower highs, lower lows. And when it comes to ranging markets, it do give us what? The equal lows and equal highs. And this equal lows and equal highs is actually going to give you the the edge to make an informed decision whenever you want to trade support and resistance. So that's why it's very good to spot them out using 1-hour time frame, because it's going to give you what is it called, the current trend of the market. Then number 4 is psychological confirmation. Now what is the whole idea behind psychological confirmation? Now if you look at here right now, okay, you can see that we have high swing, okay, in the 4-hour time frame. This is a high swing on the 4-hour time frame. Okay, this is a swing low, this is swing high. Okay, previously the market was downtrend. As you can see, the market was downtrend. Okay, this market was like a downtrend like this, and came here, market started to consolidate, go up, come down. This up here becomes the previous swing high, the previous swing high. Okay, this up here becomes the previous swing high, right? Now as the market came down to the support to react to this low, okay, this becomes the previous swing low. Okay, now the market is actually going up to the upside to actually sweep liquidity to the upside. Okay, now going to react to the previous swing high. Now that previous swing high is your potential, okay, your potential entry to short or sell on the resistance, because it's basically regarded as a strong resistance, because this swing high is actually 1 here, and this one coming up here we make it 2. Okay, which means that's brought this idea of always trade at early stage of the market. You know, when the market is actually consolidating for a bit, when the market consolidated for a while, okay, it tends like when we have multiple swing high and swing lows on either the support and resistance, it tends to break. Okay, it tends to weaken the support or resistance. Okay, thereby, you know, giving that temptation vibe. I can call it temptation vibe though, because the market may experience a large impulsive movement to the upside or to the downside, thereby breaking the support or the resistance. And maybe you are late on the market. Okay, the market have already given multiple swing highs and swing lows, and you now go and short or long the market, and you become the liquidity there, and that's it. That's how you lose the money, right? So always spot out this previous high at the earliest stage, so you know what to do. Okay, you know what next to do, or the next decision to take. As you can see here, this swing low, this swing high, and as market is coming up, this is where you want to short the market or sell the market. So the same thing is applicable to when the market was previously an uptrend and it came to a point, the supply level here, and the market started consolidating to the downside, go up. Now this one here becomes the previous swing high, okay, and this one becomes the previous swing low. As you can see it, okay, the previous swing low is this, okay, previous swing high is this, okay. We can also call this the previous swing high. So the previous swing low is this. Remember, the market have not reacted to this swing low. Okay, now let's say the market is coming down a bit to react to this low here. Okay, so you can now look out for your entry, okay, using lower time frame to actually long the market, because this area is considered as a strong support or demand level, because the market is likely to what or have the potential of, you know, bouncing on the support to go up and eventually make you some couple of profit in the market. Okay, so as you can see the entry, so you want to place your entry at the support level, and your take profit at before the swing high at the top, before it, not after, not like this, no, before it, right? And you are targeting trade ratio 1, which is a good a good reward. You're targeting trade ratio 1, which is a good reward, and your stop loss below the swing low, below this swing low. Okay, so when the market now came down like this, boom, and the market start going up, okay, and start to go up, and that's how you make a couple of you know, profit. So number 3 is identify current highs and low. Of course, you want to identify current highs and low using 1 hour time frame, because 1 hour time frame basically used to identify what the current trend of the market. The overall trend in 4 hour time frame, 1 hour time frame is used to identify what the current trend of the market. Okay, so you know which direction the market is going currently. Is it bullish or bearish? Is the market going bullish or bearish? So it can help you to make informed decision when spotting out these lows and swing highs and swing lows. Okay, so you know where exactly the market is going, and that spot the market is going, is it has it you know, touched the either resistance, the swings? How many swings do we have there? Is it more than 2 swings, or to the 2 swing lows to the support, or more than 2 swing highs at the resistance? So this will help you to actually know what you're doing, okay, so that you won't be getting stopped out anytime you are trading support and resistance. If it's more than two, or if it's more than 2 or 3 swing lows or highs reacting to the support and resistance level, you may want to stay out of the market because it may not be favorable. Okay, it's kind of a risky trade because you may enter and long or short the market, and boom, there is this massive sell, massive buy that can potentially break the support and resistance levels. All right, so you may want to avoid this trading the market whenever you have hit multiple times on the support or resistance. So number 4 is psychological confirmation. Psychological confirmation simply means these previous swing highs and swing lows, okay, are they reacting to the psychological level, the whole numbers? Are they reacting to those levels? Okay, if they're reacting to these levels, okay, of the whole number, just know that it's also giving you the more confirmation that the support or resistance is actually a strong one. Okay, it's actually a strong one. So you may want to consider taking a trade on either the support or resistance, because it's actually giving you that, okay, the psychological the swing low, previous swing low, previous swing high reacted to the psychological level, which are called the whole numbers in the market. Okay, they reacted there. So the second swing that is coming up there, or third swing that is coming up there, is most likely to actually react there because it's a strong support or resistance, and it can help you make make some informed decision whenever you want to trade. All right. So number 4 is price action confirmation. Price action confirmation is for me, I use a bullish engulfing candlestick as a more confirmation when it comes to trading support and resistance. Why? Because a bullish, when the market is currently reacting on the support and not giving me like the bullish engulfing, okay, the bullish engulfing candlestick, and I must wait for this engulfing candlestick to complete its formation. You don't just enter when the market have not yet, when the candlestick have not yet formed, the bullish engulfing is not yet formed. Okay, you must wait for the completion of this bullish engulfing candlestick, so you can now enter the market. Okay, now bullish engulfing candlestick simply signifies that, okay, the market is, the buyer side is about to take over and the market is about to become bullish once again. All right, so you are trading and you just wait for this price action confirmation using bullish engulfing. Sometimes you can use pin bar, okay, sometimes you can use hammer, inverted hammer, but I majorly use bullish engulfing. All right, so on the resistance, the same thing, just spot out, make sure that maybe there is a bearish engulfing. When you see bearish engulfing, okay, to the downside, it's also giving you that strong confirmation that sellers is about taking over the market, and you can just enter the market and place your entry above the candle, which is now the current swing high or lows. Right, so now let's go to the chart. Let's go to the main chart. Let's see how these things, how they play out. Right, okay, I'm going to use crypto, and crypto pair I'm going to use here is USDT. Okay, I'm going to use crypto, okay, to actually spot out these things, to actually explain these things. First of all, on the higher time frame, like 4-hour time frame, I want to spot out the trend of the market. So what is the trend of the market? This is the 4-hour time frame, right? So what is the trend of the market? Let me just delete these stuffs to avoid confusion. Okay, what is the trend of the market? I'll just pick up the trend line from this upper swing down. Okay, as you can see, it's a valid trend line because it's touching more than 1, 2, 3 swings, right? 4, 5, right? So of course the general trend of this market is a downtrend. Now I want to go to what and this 4-hour time frame is where I'm going to map out the key zones. The key zones in the sense that the swing highs, the previous swing highs, and the swing lows. This is where I'm going to map it out on this higher time frame, like 4-hour time frame. So I'm going to currently I'm going to map it out, okay, and I am also going to be mapping it out using the psychological levels. Okay, I'm going to be using the psychological level to map this out, right? So how do I do it? So I'm going to pick up this horizontal line, and from here, what is the upper whole number here? All right, this is the whole number here is 0.15,000. Okay, this is 0.15,000, right? Okay, let me put it 0.14,800. This is a whole number, 14,800. So I can just put it here, coordinate it so that it can give me what I want. 8. Okay, so this is for the resistance, which is the supply level. So for the demand level, as you can see, the whole number, nearest whole number, the current market is 0.13177. Okay, the nearest whole number to it on the demand or support level is 8. I think this is 0.12600, right? 0.12600. Let me just use this 0.12400, right? So this is good. 0.12400. Okay, so now I have mapped out the swing lows and swing highs using the psychological level. Okay, and they are resting on the psychological level. So what I will do now, as you can see, this is a swing, this is a swing as well, this is a swing as well. These are swing highs, and these swing highs are basically the equal highs and equal lows of this range market, because this market was actually a range on the higher time frame, right? So as you can see where the market is currently is right now, and it's coming down on this demand or support level, right? So now let's go over to 1 hour time frame to actually see what's happening there for more confirmation, right? So let's go to 1 hour time frame. So as you can see, 1 hour time frame, the market is still bearish, right? Okay, the market is still bearish, okay, wanting to coming down to react here. So this is 1 hour time frame. As you can see our major swing highs and lows. Okay, these are major swing highs and lows. Okay, remember this market now, we didn't spot out the early stage of this ranging market. Okay, so what is most likely to play here is this trend line here you are seeing here. This trend line you are seeing here is getting weaker. Okay, it's kind of getting weaker, and market is most likely to break it, okay, or break the support level. Okay, but as this market is looking like this, all right, so the trend line is most likely to get broken. So maybe if you still enter at the supply level, the demand level, which is support key zone, okay, you may still have to make something out of it though, but we didn't spot this at the earliest stage. But it's always good to spot this on the ranging market if you want to trade support and resistance at the earliest stage of it. Okay, now let's look at it. Okay, this is it. So as you can see, the previous swing low of this market is this one. This is the previous one. The previous one is this swing low. Okay, the previous swing high of this market is actually this, right? It's actually this one. It's the previous swing low of this market. Now you want to actually identify the current highs and lows, of the market. So if you look at it, the current highs of this market is this is the low, this is the low. The current high is this one. The current lower high is this one, right? This is the current lower high. Okay, and this is the lower low here as a result of break of structure. This is lower low. This you see here is the lower low. This is the lower low of the market. Okay, the current low of this market, the current lower low of this market, and this is the current lower high of this market. As you can see, markets have actually broken the structure here, kind of break structure, but it's not yet complete. The break of structure is not yet complete. So the market will come down, as you can see, and it's coming down to this swing low. And this swing low, where is it currently sitting? It's currently sitting on the psychological level, right? Okay, it's currently reacting to the psychological level, and that's now give us the idea of spotting out this psychological confirmation. Remember, psychological confirmation is when the swing low or the swing high of this market is reacting to the psychological level, which is the whole number of the overall market. The previous swing low or previous swing high is reacting to it or reacted to it. Okay, reacted to it. Let's put it that way. Reacted, the previous swing low or previous swing high reacted to the psychological level. Okay, now the market that is coming either to the downside to react to the support or the resistance is most likely to what? To consider reacting, okay, using that either swing low or swing high, because that support and resistance, okay, that the swing low or swing high is resting upon is considered as a strong what? Support and resistance. So as you can see here right now, as you can see here, if you pick up this your long position too, so you want to long the market from here, okay, you may want to, you know, put your stop loss below the swing, this swing low. Now your take profit to the before the swing high, okay, before the previous swing high. This is the previous swing high, okay. You want to place the trade like this. So as you can see, the market is currently coming down, okay, it's coming down to react to this market right here, right? So as the market is coming down, once the market is currently here, I'm looking for what? The last one, which is the price action confirmation. So I'm looking to see if I am going to see a bullish confirmation of bullish engulfing candlestick. So once this confirmation of bullish engulfing candlestick totally form, or maybe another candlestick pattern entirely, but I basically use bullish engulfing or bearish engulfing, just like you see here. This is what exactly play here on this low, of the market. As you can see, this is what exactly played here. Okay, this is bullish engulfing. After this bullish engulfing form, the market starts to go up. So if I am to place this trade here, if I'm to long this market here, I'm going to long it from after the completion of the bullish engulfing candlestick and place my stop loss below the confirmation of the candlestick, this bullish engulfing. So I'm going to take profit at the highs of this market, okay, closer to what? The psychological level. So as you can see, the risk to reward ratio here is basically, okay, it's basically like 2 risk to reward, which is a good one. So if I place this trade here, I'm going to make, if I'm risking $100 here, I'm going to be making like, you know, $200, which is a good one, okay, which is a good one. It's not bad. So this gives me the last one, which is the 5th one on the list, which is price action confirmation. So after the bullish engulfing form, I'm going to enter the market and I'm going to make a couple of profit, right? Okay, which is a good one. Okay, now let's look for what? For sell opportunity. Let's look for sell opportunity, right? So let's look for sell opportunity. Okay, let's look for sell opportunity. Okay, this is I've seen this is a bearish engulfing as well. This is also a bearish engulfing. Okay, this is a bearish, or this swing, high swing, okay, high swing. Okay, this is not like a bearish engulfing, but this is a bearish engulfing, but you can still use this. I think this is a pin bar something or hammer. Okay, you can still use it to as your confirmation here. Now, okay, let me say I want to use this as my price action confirmation. So once this thing has formed already, so I'm going to enter sell here, place my stop loss above the bearish engulfing, take profit before this before the support level, which is where this previous swing low is resting upon the psychological level. So I'm going to take profit there. So as you can see, my risk to reward ratio here is 5:1, which is a good one, with a massive one. If I'm risking $100 here, I'm basically making $500 plus, which is a good one. So for you to actually trade this support and resistance, you must, okay, I wouldn't say you must, but you need to actually consider these 5 criteria, these five hack, okay, of trading support and resistance. As you can see, anywhere hence I've already spotted this out. It plays out like this. I can I've seen this bearish engulfing here as well. I can decide to take a stop loss above the swing that form, and take profit somewhere around here. It gives me almost 1:1 ratio, which is not bad. Almost 1:1 ratio is not bad. Okay, I decide to take profit here. Okay, I can decide to take profit here. As you can see here, the market is still coming down. It's still coming down below here. Even if I enter this market and it have not hit my take profit, the market is still coming down. But then I can still decide to take profit here and exit the market. Hence, the bearish engulfing is too, it's too big. Okay, it's too big, right? So the same thing happened here. I can decide to this bearish engulfing here. I can decide to take profit above. The same thing happened here. Okay, as you can see here, the same thing happened here. Okay, this is bullish engulfing there. This is engulfing candlestick, right? So I can decide to long the market from here, stop loss below the swing, and take profits above the swing high. Okay, and I made 2:1, which is a good one. Okay, so I believe with this you are able to actually learn one or two stuffs here. You can be able to make some informed decision when you are trading support and resistance. So if this video helps you, okay, if you learn one or two on this video, please make sure to hit the subscribe button. Hit the subscribe button. Turn on the notification bell so that you'll be getting more and more financial trading content, ranging from forex, crypto, synthetics markets, and more educational content that will be coming up your way. And if you want to join our community where we drop daily signals, we make cool money, cool cash every single day for free. I also go live and share with you guys how I trade the market. Make sure you click the link in the description of this video to join our crypto trading community. Okay, and also if you want to learn how to trade the market by yourself, learn the better ways to trade, to be a better trader, you can also check the link in the description. Okay, you can get our crypto ultimate banking course, okay, that is going to shape you and help you to trade the market, okay, the better way, right? So I can't wait to see you in the next video, right? Bye for now.